First of all, you've got, Chinese stocks have outperformed pretty much across the board this year. The small cap names, the Chinex names are up, 30+% or so this year alone, even higher from the initial falls when Wuhan was locked down. So in that sense, they've been great outperformers. I think the news flow out of China, which of course we know is controlled, but certainly sounds a lot better than the States generally. And almost day by day, the States seems to shoot itself in the foot. The picture the States is presenting is one of a country that can't get on top of the pandemic and seems to stumble from pillar to post with knee-jerk reaction.
Fraser, that being said, it's not all rosy in China, is it? I mean, I know the data is pointing to an improving trend, but we had a guest on earlier on Squawk Box who was saying there's still some pretty worrying signs, especially if you look at the unemployment picture.
You're absolutely right. That is entirely not the entire picture, but it is the short-term stock picture. And as we know, nothing attracts money like a rising stock market. But China's economy was in severe problems at the end of last year before anyone had heard of coronavirus, Wuhan, or COVID-19. And the situation has only got worse on the ground. Yes, in the tech space, some of these companies have outperformed. It's been a real blessing for them to cement their position with a number of apps or services, etc. But the underlying economic problems in China are severe: non-performing loans, unemployment. These are serious problems, much more serious than they were 6 months ago, and they're going to be with us for a number of years.
It does seem as though the geopolitical tensions are getting worse than they were 6 months ago as well. I mean, certainly what we're seeing in the way of U.S.-China tensions over issues such as what's taking place in Hong Kong, but also now the fact that you have these U.S. aircraft carriers in the South China Sea. Yet investors seem to just continue to shrug off these risks. What's your take?
Yeah, so the geopolitics is certainly a lot worse. China seems almost week by week to go out of its way to pick a fight with somebody. In the case of the Indians, literally pick a fight with them. And so certainly the geopolitics makes the world environment for China just a tougher one to negotiate. But the trouble is, you've got to remember, is markets are very poor at pricing geopolitical risk. I remember being on the show years ago and we talked about possible nuclear attacks by North Korea. How on earth can you price in that? Ultimately, what stock markets price is future growth of companies and how many widgets or how many apps they can sell. And that's ultimately what stock markets can focus on, and that's what drives them. Geopolitics is a real concern, but it's very difficult to price in, certainly past some initial sort of day-to-day shocks on particular events.